started. Hello, everybody, to another day where we plan to profit, another daily plan. And this time we're starting here in the Asia session. Turn that down just a tad. Hopping over right to the charts. The ES rallied into the end of day. S&P did quite fine, so did crude. And the dollar went up alongside commodities, alongside equities. But Bitcoin was falling. Something going on with crypto these last 4 days is it's been on a steady decline here. How about we do a little linear regression real quick? All right, so into the day ahead, this is our expectation. Maybe that will mean revert somewhere around here to, call it 30.3K. Let's go ahead and snap in that expectation. And that's a pretty conservative expectation, I'd say. No major risk of getting this one wrong unless we just go down, down, down. And in that case, now you're talking about mid 29s. And I don't think that's all that likely in the next 24 hours based off this expectation. However, we could use range probabilities for the day. Let's see here. Let's see. I still got that visual bug. I gotta work out on that kink. Gotta work that kink out. Now, well, pretty shortly, I'll be publishing an update that'll fix this. This thing is, for some reason, way down here. Yeah, kind of sucks, but you could always change the look back, because apparently it has something to do with a day in the data historically doing something weird. Yeah, you see, when I change the look back, something happens there. However, the distribution didn't really change that much, even when you half the amount of data loaded. Although that should change the shape of the distribution more significantly. It didn't in this case, so our interpretation is going to be exactly the same. Looks like most of the time your low for the day comes in around, call it S0.5, just below that. Call it 29.9. Okay, somewhere in this range here, so just below 30K. Kind of like what we had over here. So maybe we get one more dip, and then we revert back up there. Yeah. A dip, and then a rally, and then kind of a close somewhere around here. Let's do something simple, though. Let's say, yeah. Let's have this sort of expectation going into the day ahead. How about that? Okie doke. Now for oil. Oil has been not doing a whole lot. It also has this 4-day range that I see that we could linear regress. The EIA just came out with their, I think, a multi-100-page report. It's a monthly report that they do where they report all of the statistics for energy commodities. Yeah. So unless you're getting a breakout somewhere above 70 in the next 24 hours, I'd anticipate more or less a move sub 69. Real quick, I gotta check everything's good. Everything's loading. Make sure everything's good, just to double check. Last time on the stream, I forgot to do a transition. So now I got a little paranoid here, but all right, it's good. I know what I'm doing. Everything's, you guys can see everything. Sweet. So let's put this in sub 69. I have some weekly forecasts that I've been making that we hit. And I think today, Wednesday, is probably a good time to review some of the things that I went over last Saturday in the trading group. Real quick, there were a few trade plans that I did that went especially well. I think it was USD CAD. What a call. And this was a day trade. This was just the plan for the day. Yeah. What a fantastic call. And I was watching it down here. And FYI to prove, I got charts. Let's see here. USD CAD, week 26, 2023. Oh my god, here. I'm just gonna pull this one up. Let's see, what price was that? 131.2. Oh my god, that was like right here. Check this out. So this is what I was watching. That's the screenshot on this trading day. I was like, hey, that looks pretty good. Oh man, was that great for the day? Just this whole little section right here. Catching the low of the low. And the plan was to be long for the entire week because there was something crazy. It was something like more than an 80% probability that your low was somewhere in this price range. Yeah, around 131 to up to 139. 130, which would be right around here. So in this whole smackaroo area, this is where we were expecting, and it came in very conservatively. I thought it was going to actually come down to this psych level, right, of 131. I was actually not anticipating such a freaking a massive takeoff. But man, you can't deny it. It was freaking called like the damn thing. Definitely called the damn thing. Let's see here. We also got euro dollar. And euro dollar keeps going lower. You know, people were saying, Joe, you know, why are you shorting into the ECB meeting? I'm like, yeah, you know, it's not the, you know, best idea in the world, but I believe that the ECB is now making a policy mistake. They are tightening into an economy that is slowing faster than a lot of other countries. I mean, it's not slowing as fast as New Zealand. New Zealand's doing horribly. And arguably, Euro's doing all right against... It'll probably do all right against the UK, right? I mean, we can go ahead and look at Euro Pound real quick. Against the UK, they should be doing all right. Yeah, see, they're doing a-okay against the UK, but not against the United States. And I keep reading forecasts of people saying, "Oh, the Eurozone, the Euro area is going to be doing so much better than the United States." I'm getting outlooks sent to me today talking about all the employment data that got released recently in the United States, and people are saying, "Oh, you know, there's people who are not getting laid off, right? This is actually a good sign that we probably aren't going to be going into a recession." And then the 3 or 4 guys that I like to listen to when it comes down to macro stuff that I learn a lot from all the time, and you know, they help me get better and better. They go ahead and they point out this thing, like, it's called employment hoarding. And the way you measure hoarding, employee hoarding, in an economy is if the public, like the non-farm payrolls, if that number is less than the private payrolls. It means a bunch of private companies are trying to hoard as much of the employment as possible. And the more hoarding you have, not a perfect signal of recession, but it means that employment's still pretty darn tight to an extent in some places where I'm sorry, I'm hearing a, I don't know if you guys hear the cat, but she's just, what's that you got there? Don't tell me the cat got something. Uh, she's just going around meowing. The cat, the damn cat's lonely or something. I was just hanging out with her not even like 30 minutes ago. Yeah, I don't know what's going on. The cat's fine. She's just getting real chatty all of a sudden. Yeah, perfect time to get chatty. You know that, right? Perfect timing. All right, perfect timing. No, but I love the cat. Yeah, I love the damn cat. Anyways, there's an effect called employment hoarding, and it's going up because some people might be misinterpreting employment. They're not seeing the hoarding factor, where there are some companies that are able to pay good employees to keep them on, and there are some companies that are going under and they're getting acquired by the companies that still have a little bit of money going on. So normally you'd see layoffs, but companies are really trying to fight against downsizing right now. So you're seeing weaker companies lay off and stronger companies either keep their current employment level or increase it. And that is somehow measured as hoarding. So, with all that said, that's happening in the United States, but it's not happening in Europe. Companies alike are just laying off people. The economic situation in Europe is, I think, the outlook on it is materially weaker than that in the United States. I just don't see it. I where are these guys getting their expectations that Europe is actually going to outperform the United States economically over the next 2 years? Like, the assumptions that they're making, first off, is it's flawed because you have a war going on. You have the Ukraine-Russia war going on. It's like, until that thing settles down, you're never going to have Europe outperform the United States. Like, the most recent PMIs that came out on Friday, right? Like, I think this was here, right? When the PMIs came out last week, oh my God, it was horrible. France is totally contractionary right now. France is just in the gutter. And manufacturing in Germany is, I mean, the German PMI, manufacturing, that is horrible. This is terrible. It's contracting. It's like, this is the most recent one here. This is the June 2023 PMI. We're sitting at a level of 40, and it's been just going down, 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 down for the last 27 months. This is terrible. Now, if you go to, I believe it's that, yeah, German services PMI, Here's June 23, and you can see it's kind of held up, right? Way less of a problem here on the services. However, you did just fall from, you just fell 5%. You just fell 3 points on the level, which is not what you want to see, because how a 3-point fall, I think that's pretty much, oh my God, that's actually not a good sign. So here's what I'm looking at. You see these falls over here, these declines? So these declines from early to mid 2022, they were all anywhere between 2 and 3 points of a decline. The last time you had a decline in the services PMI above 3% in Germany was back here in December of 21, where it fell 4 points. And then you had some similar huge declines back here of 3.8 and 4.6% over here going into the third quarter. Yeah. So apparently the PMIs, if you're just looking at it on a whatever seasonal basis, it doesn't look so fantastic, because there's the July, and then here's August, September, October, then back again over here in this year. Here's August, September, October. August, September, October, you can see continuing a continuation in the decline of services PMIs. But one thing that we have to look forward, actually, I'm kind of interested. France PMI. Oh, cool. We have French services PMI. I was just noting, they have July 14th as a holiday. I'm wondering, is there a seasonal pattern in July? No. July falls too. Damn. I guess. Well, let's see here. USS PMI. Huh. I'm laughing because I just realized something. How long has TradingView had this data? How long? I really am wondering when this data was added to TradingView. Because I swear, like earlier, like this year, all throughout, it's like early, the first half of 23, and all before the year 2023, TradingView did not have all the PMI data like it has here. Wow. Do they have Great Britain? Yeah. Do they have... Oh my God. I'm going to build some cool stuff with this. Thank you very much, TradingView, for getting the data here, working with S&P Global and getting the PMI data built into TradingView free. Oh my God, how is it? Oh, well, you don't have that much historical. Is, you whatever historical data you need, that's like whatever, man. This is good. That is cool. I mean, it'd be nice to have the historical data, right? Maybe that's one of the reasons why I haven't been using this. It's just there's no historical data. Yeah, that kind of sucks, because, you want to be able to see PMIs going back to the early 2000s, but you know what? This should be fine. This should be enough. If you got some general statistics on how things have generally occurred, it's good that now you can just load the most recent data here into TradingView. That is fantastic. Fan-freaking-tastic. Whoa, look at that. Whoa, euro yen. Is that Oh, this is for the month. For a sec, I was like, this is not for the day, is it? Shit. And yep, there you go. Positive yield spread is now tapering out here. The yen trades may be rolling over, right? Look at the prior times the yield spread started to roll over, literally except for this one, and even then you could have got stopped out, break of a new high, right? And then it flips, right? Yield spread flipped on the break of that new high. Yeah, check that out. Wow. Positive yield spread on the way down is weird. Yeah, looks like you had an inverse relationship here on the yield spread side of things. Wow, man. Most of the time, that relationship should be positive. Wow. Actually, was that COVID? Huh. And you can see there's the yield spread there. Red, 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 red. And green, 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 green. And then the yields were horrible. All the yields, all the yields were so funky to trade during this period of time. Jesus. Man. I just look through this chart and I just see all the old trades. I just see, man. Good stuff. Good stuff. Let's see. Anything else? That's not great. All right. S&P. We got a nice rebound here today. I was reading that stuff like Tesla fell, though. No, Tesla didn't fall. I wonder what that was about. A big newsletter sent me a message today saying that a bunch of tech stocks fell, but I'm like, outside of this day, it's like everything looks totally fine. And then even if you go and you look at this index, which is an index of the top 10 equities within the S&P 500 ranked by weighting. So however big Apple is, they take up that percentage of this index, and then you go on the Microsoft and Amazon, see how much they are, and add that as a weighting. And also the top 7 NASDAQ companies make up this index. And you can see it's just been a little drift lower. Net, these are green candles, right? Maybe you want to use hollow, right? You probably want to use hollow candles here. So you can see like this bar, right? These hollow red bar. Yeah. And then a couple of hollow red bars here. Jeez. Alrighty. So with that in mind, let's go back. Now let's go down to a 1 hour. Bring up our range probabilities. For the ES. Oh man, Euro taking a hit. Fell down like 10 pips just now between me talking. Okay, ES. How high can you go? Pretty freaking high, I think. Pretty freaking high, I think. Probably around this R1 daily pivot. Call it 444. If you're going to go up, it'd be moderate to assume that. Yeah, and as far as downside goes, I think you're kind of capped here. This is interesting. So look at this downside. So see how we have nice bright green right here for our lows. So it's saying, hey, most of the time if your low is pretty conservative on the day and closer to the open, you'll probably get your low for the day roughly around here. And we can say generally above this S0.5 daily pivot point. And then once you get below this price level, you see how the color goes from this bright green to this sort of duller green here? That's because the probabilities here on the right-hand side, you can see how they get smaller, right? It goes from larger numbers to smaller numbers. But then as you get further down, as you get closer to S2 on the daily pivot, the probabilities begin to increase. So it means, hey, once you start crossing and going through and let's say getting past this S1 pivot, once you get past 4,400, the next most likely zone you could end up at is at this S1 pivot, which is, give or take 4380, plus minus 2 points, right? 4380 is exactly right down here. But this is saying, the upper 4380s seems more probable. But when you cross such a big psych level like 4,400, 4380 is just another psych level. It's another flat level. All the 10s seem to be psych levels. So you find some concentration in orders at every 10 points here on the ES. And as far as upside goes, 4,440 points. That's my expectation, at least if there's more upside to see for the day here on the ES. And the dollar just saw a bit of a jump here at the open. It's continued to rally over this day, and I just find it interesting how the ES and oil are rallying alongside the US dollar. I mean, that's not going to be good at all for a lot of countries that buy oil in dollars. So not only is the US dollar more expensive, but now the thing that you're trying to buy with those expensive dollars just went up in price. Like that's gonna ruin some people's days. A lot of people whose it's their responsibility to. Let's see here. If it's your responsibility to be in control of oil inventories at some production facility, these sorts of volatilities is just not fun to manage if you're on the buy side of oil. Oh my god. I mean, maybe you were happy down here and you're going, shucks, now that it's like $2 higher. But I have an expectation based off these models that, hey, we didn't even look at the range probabilities on oil yet. Look at that. Oh my freaking god. Here, let me let's try and loading more historical data. Hopefully, I don't think the graphical glitch will show up here, but hey, let's simulate more historical data, see how more accurate we can make this, and it still shows up. The pattern still shows up. Most of the time your low is roughly around here for the day. Call it somewhere in the range of 4640 to 4680, so just below the daily central pivot. This looks, I'd expect the low to be somewhere around here. Now, some TA guys are going to be like, well, that's just, you're calling something like this, right? You're just trying to buy off the top of these highs. I'm like, no, that's not what I'm trying to do. My trading decision on this particular trading day is independent of what has occurred in the prior trading day, generally speaking, right? I mean, it's a very basic assumption that a lot of quant traders have, which is IID. What is it? Individual and independently distributed. It just means that the data from the prior step does not impact data from the next step. Every step or every day that we go through has its own unique individual characteristics, and the analysis you do on that particular day needs to be done for that particular day, because it doesn't autocorrelate out into the future. There's no correlation with itself from prior steps. That's just a basic assumption. However, there is very, clearly stuff like momentum and trend trades and up and down moves and, zigs and zags, stuff like this, right? Yeah, you could try and model that with IID, but it's probably not going to catch all these jumps. And, there is some correlations going on here. I mean, you can see there's a lot of red bars going here. And then as soon as this ends, see how it goes: green, red, 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 and then a jump and more green reds. Like, modeling out price is not the easiest thing in the world. It's why quants exist and why they're paid so damn much. And also, one of the reasons why they go out and try and collect all sorts of, fancy data sets. Oh man, I post a lot of stuff in my Discord about all the quant stuff that I find, all the quant education, right? And you can learn a lot about the world based off of the mathematics that are used, in the quant space. A lot of just cool little factoid stuff to help give you context and how the world works. And this is one of those little things. It's like, hey, instead of making an assumption like this based off this little green box, I could come to the same assumption based off a linear regression and an expectation for where most lows have historically occurred over the last 5,000 bars using a daily higher time frame and an actual probability distribution, and have a set degree of a probabilistic certainty, some odd, right? 63% of the time it says here that the low is above this $68 level. And roughly around this area past S1 is starting where you get into like your tail risk odds, your falling knife odds, roughly around here. I don't even know if price did something like this, I don't even know if this is a smart buy or not. Because understand that this linear regression is assuming that price is behaving linearly effectively on average over time. And these blue lines are a standard deviation calculation. So if your price isn't standardly distributed and it's not linear, then what is this line for? Well, that's because when I'm doing this expectation over the next day, I'm willing to make those assumptions like, okay, maybe during this specific slice in time, maybe it is, right? And maybe it is linear, maybe it is standardly distributed. But I just wanted a linear fit, and I wanted the standard deviations to plus or minus based off the data in here from the mean. That's all I wanted. And because I understand intuitively, okay, that's how it works, those assumptions may not hold, but I understand the conditions for when, like, okay, this can be a useful form to help me interpret what's going on in the markets right now and set future expectations. And then I can say, okay, once we maybe go above this upper deviation line, I mean, you can just probably pull up the data here and see it would be incredibly easy for us to do something like this. Like, come up here to the $70 range and then come all the way down to like sub 69. You could, within reason, you could have a move that looks like this. And this would technically break the assumption we made using the data over the last 4 trading days in this linear regression. Would make the assumption that once you go past this second deviation, that this linear regression trend no longer, holds. That there is no trend, effectively. This trend doesn't hold out going out into the future. Let's see here. Real quick. So yeah. So really a lot of this stuff when it comes down to trading, especially the quant stuff and this fancy probabilistic stuff, really depends significantly on the assumptions you're making about the underlying data. And that goes for most things. It's not just markets, right? It goes for golf. It goes for fish. It goes for a lot of stuff. It goes for, oh my God. One of the things I was just watching recently, and it's kind of blown my mind since I've learned about this. There's a distribution to how people use their ums and ahs when they're speaking, and it follows a Pareto, I think a Pareto or a Poisson distribution. I'm like, oh shit, because once you understand that just means that they and ah at an interval. So if someone ums and then the next time they in 5 or 3 seconds from the last time they did it, you can anticipate in the next 3 to 5 seconds that they'll do it again. And then again, and then again, and then again. And then once you notice that it's not totally random when someone ums and ahs, you're just, sometimes you're like, 1, 2, 3, 1, 2, 3, 1, 2, 3. And it's just like, oh no. You're just focusing on when they're going to be doing their next and ah. I posted a video about it in the off-topic section. It's just like little things like that, you know. They're fun to learn, and it kind of tells you like, oh, you know, some of the mathematical descriptions that we have of our world are quite valid models. Oh man, fun stuff. And then you go ahead and you try to model price, and don't get me wrong, there are definitely some great, successful, profitable models of price, but there are plenty of stories of this or that other quant guy, you know, blowing up $1 billion firm here and $1 billion firm there, all because they made 1 or 2 bad assumptions. I think that's one of the things with the Great Financial Crisis, right? They during the Great Financial Crisis, if I go to SPX and I hide all this stuff because I'm going to be going to like a monthly time frame. Back during the Great Financial Crisis, there's like a thing where all correlations in crappy markets like this go to 1, which is everything is correlated with everything. Apparently, there were some quantitative models around here that had hard-coded correlations in them. The correlations weren't like variable, or if the correlations were variable, the trading rules were programmed just incorrectly. Where there were some firms here that lost loads of money because they didn't take into account that the correlations during some period like this, that they all just go to 1. So needless to say, there's some horror stories, you know, about too much money in that. Yeah, there's that. There's quite a lot of stories like that. I mean, I believe it's here in this book, right? I mean, I should probably change my camera view to this. And I've shown this book like every other stream now, the Quants. I mean, I'm kind of happy I got this book because I was able to pick it up brand new for like $7. The hardcover on Amazon's like 25, so I feel like I got a steal. Not only am I trying to make deals, outplaying people in the markets, I'm here outplaying people on Amazon. Alrighty. Let's see, how long have I been going for? I've been going for about 50 minutes, you know. I think I've covered pretty much everything I wanted to cover. Is there... Yeah, is there something else I wanted to talk about? Let's see, there's the Eurodollar, the Euro CAD. Actually, I don't think I brought up Euro CAD. Because we had a particularly good trade setup. So we caught this move up and then down. And then as the yield spread started to strengthen, we had this other trade plan to go long, I believe. Yeah, here it is. I mean, I can just show you guys, right? Yeah, I mean, this is my indicator. This is my work. So I need the pivots and I need the probabilities. So this is what we were looking at this week in the trade group. We were looking at this, big fuck off 50% probability here. 50% of the time you're low for the week is here. I'm like, I think the Canadian dollar is probably going to get weaker compared to most currencies, especially the euro. And I think the euro is going to be stronger than the Canadian. And that turned out to be great, and because you know what, the euro actually got stronger at the right off the beginning of the week here, and now it's starting to fall down. However, the trade plan was down then up, and real quick, I'll go ahead and if I could, no, copy image. Can I paste real quick? No, it says that the image is too large for some reason. Well, real quick here, I'll go to EuroCAD on the chart that I made the trade plan on, and I'll just copy the lines. There's a feature in TradingView where if you have two chart layouts, but you have drawings in one layout and you want to move them to another, you could copy them from the one layout, go to your other one, hit Control V, and there you go. Yeah, so this was the trade plan we made on the 24th. So this was 4 days ago now, over the weekend effectively. So I was expecting down then up. We technically got the down. I was just anticipating this area here. Sure, it could come down to this psych level of 43. I was saying, yeah, generally, if it's coming down, it's coming down to 43. But now get this. Go and look at the top for where the expected top was. That probability weighted pivot high. Smack dab got it. Smack dab got it. I was really only anticipating it to get close to this R1, and then once it crosses R1, I'm like, dude, this thing's going to 145. I wonder, did I make a write-up saying that this thing was going to Yeah, I did point out R1.5 in the trade plan here, looking at it in the trade group. Let's see. There's also one other place that I've started posting details on trade plans and trade research in the group, and there's I showed it off in the last stream, but real quick, here we go. My computer is lagging just a tad here. Yeah, looks like I had a slightly higher forecast. Yeah, okay, so I'll go ahead and I'll share this. So this is what I'm talking about. I have Obsidian as a note-taking app, and in it, I'm able to use Markdown to create a table. So if you wanted just to know, like, the things that I'm looking at FX-wise, here's all the information you need. And then there's links to group plans in the trading group. There's a picture with a date of when I made the forecast, stop levels, targets, positions, if I'm in it, if it's just in progress. I'm only trading euro dollar at the moment right now. And then the last time I updated the row, and I mentioned USD yen in here, USD JPY. So let's go over there real quick. So I was anticipating a little bit higher euro CAD, and that's probably going to be more or less based off of a. Oh my god! Oh my god! It's a damn thing. That probability weighted pivot high. Jesus, man. How about for the week? Yep, and for the week, roughly around here is the edge of where you start to see your normal top off. Because once you go past this R1 pivot, you're now starting to deal with slightly thinner odds, more uniform looking odds, right? 6, 5, 6, 5, roughly. Then once you start going past this R1.5, you're starting to deal with tail risk, blow off top, bubble-like scenarios. I think my expectation was that we'd head to 144.5, so I still have some expectation that we'll get there, but man, if we get to 144.5, I mean, in all seriousness, my expectation is that we get there maybe next weekish. I have another indicator for seasonal expected value for trading days projected out in the future. And I'll just show you guys what I mean. Go ahead, bring this up on a daily time frame. Damn, the yield spreads are starting to let up. Look at that. So the yield spreads got super positive from here. Positive, 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 positive. And now the yield spreads are starting, for the first time in forever, going a little bit red. And you can see that we have positive seasonal expected value per trading day going out up until the 4th trading day of July, which is roughly the 6th calendar day of July. So the Thursday here, I believe, of next week. Yeah, Thursday of the next trading week ahead of us. And you can see we get our negative seasonal expected value starting from the 6th trading day going out to the 8th. So starting around either the end of the next week, the first trading week of July, or around the opening first couple of trading days for the second trading week of July. Maybe there's something there as far as going long yen. I do know that there are some institutions that are more seriously considering it over. I've been seeing outlooks saying, hey, we should, continue going short the Japanese yen against all these assets. But in the back of my mind, I'm thinking, hey, the BOJ did say that one of their criteria for actually tightening policy was that they could surprise markets with their tighter policy announcement, that they weren't going to tell the markets ahead of time that they were going to do this tighter policy announcement. So every meeting technically is live. Look, you can have a consensus expectation that they're not going to change anything at the next meeting. That's all well and good. But there's, in the event that there is a surprise change in BOJ policy, you could see dollar yen go down like 200 pips on the day, like insane amounts of volatility. So there's just big risk in the event of a BOJ hike. Insane risk, because they're not going to telegraph it. They're not going to telegraph it. So while consensus expectation is still for a hold, a pause, effectively, it's a valid concern, and more people are going to be probably talking about it as outlooks get released over the next 3 days. Speaking of which, outlooks for the week ahead of us start coming out Thursday and Friday, so hop into the Plan the Profit Discord if you want to get notified of when those outlooks start getting released by institutions, so you can get the link and read them for yourself. Okay, doke. I think now's the time to end the stream. I want to say thank you for everyone who's been watching so far and who's been watching me every single day so far. I see the numbers going up on the stream. We're consistently holding around, depending on the day, especially when I do these streams in the morning, somewhere around 5 to 10 people are watching. Don't get me wrong, that's relatively low by most people's standards, but considering that I just started doing this out of the blue and everyone enjoys watching me so much, I'm like, hey, let's keep these daily streams going. I had to do today's stream during Asia instead of in New York, simply because I stayed up a little too late last night, couldn't get up early enough. But I made sure I came here energized and ready. So, thank you guys for watching. I've been your boss, Joe Boss. I'll be hanging out in the Discord voice chat for a bit. And if you want to join the trading group and all that, links to it is in the description down below. Go to the WAP store. And yeah. See you guys in a bit.